Episode 16, Exploring Funding Options, Loans, Grants, Investors. Welcome back to Start Your Business Today. Today we have a vital topic to cover, exploring funding options for your business. Funding is the lifeblood of any venture, whether you're launching a startup or looking to scale your operations. In this session, we'll delve into various funding options, how to secure them effectively, key steps for successful applications, and some real-world success stories. Get ready because we're about to arm you with the knowledge to fuel your entrepreneurial dreams. Section 1. Defining key terms. Before we dive in, let's familiarise ourselves with some important keywords that will guide our discussion today. Cut to whiteboard writes down the keywords clearly. 1. Funding. The financial resources needed to start or grow a business. 2. Loans. Money borrowed from lenders that must be repaid plus interest over a predetermined period. Grants. Non-repayable funds given by governments or organisations to support business initiatives. Investors. Individuals or entities who provide capital for startups, usually in exchange for equity or convertible debt. With those key terms defined, let's jump into the different types of funding options available to you as an entrepreneur. Each option has its pros and cons, and I'll walk you through them. Section 2. Types of funding options. There are several primary funding options you should consider when looking to finance your business. Let's explore each one in detail. 1. Self-funding, bootstrapping. Overview. This involves using your own personal savings or assets to finance your business. It's a popular choice as it gives you full control over your venture without taking on debt. Pros. Complete ownership. No interest payments and a strong personal investment can attract future funding. Cons. High risk if the business fails and limited initial capital. Example. Many successful entrepreneurs started off using their savings or side jobs to bootstrap their businesses. Loans. Overview. These are borrowed funds that you repay over time, usually with interest. Types include traditional bank loans, lines of credit, and online loans. Pros. You maintain ownership of your business, and loan payments may improve your credit rating. Cons. Interest costs can add up, and there is a risk of debt if business revenue doesn't cover repayments. Key tip. Prepare a solid business plan and personal financial statements to enhance your credibility with lenders. 3. Grants. Overview. Grants are financial awards that give you funds without requiring repayment. They often aim to foster specific industries or communities. Pros. No repayment terms, which means free capital to grow your business. Cons. They can be very competitive, require time-consuming applications, and have specific usage rules. Example, the Small Business Administration, SBA, and various non-profits offer grants aimed at specific populations like minority or women entrepreneurs. 4th, crowdfunding. Overview. This involves raising small amounts of money from a large number of people, typically through online platforms like Kickstarter or Indiegogo. Pros. It not only raises funds but also validates your product idea and creates initial customers or supporters. Cons. Requires effective marketing to attract backers, and you often have to provide perks or early access to your backers. Case study. Read about Pebble, the smartwatch that famously raised over $10 million through Kickstarter in 2012. They often mentor entrepreneurs as well. Pros. They bring in not just money, but also valuable industry connections and experience. Cons. You'll have to give up a portion of ownership, and this can lead to a loss of control. Tip. Creating a strong pitch is crucial since many angel investors make decisions based on the team behind the project. Venture capital, VC. Overview. VC firms raise money from investors and allocate these funds to startups with significant growth potential. It often involves larger sums of money. Pros. Access to significant funding and resources along with mentoring. Cons. can demand considerable equity in return and often require a clear exit plan, like selling the company. Insight. Most VCs look for tech startups or brands that can scale rapidly within their industry. Section 3. Steps to secure funding. Now that we know the types of funding available, let's discuss the key steps to secure the funds you need. Here are 5 essential steps to follow. 1. Develop a solid business plan. Your business plan serves as your roadmap for your business and a pitch for funding. It should contain executive summary, briefly describe your vision and business concept, market analysis, detail your target audience, market trends, and competitive landscape. Marketing strategy, outline how you'll attract and retain customers. Financial projections, include cash flow forecasts, income statements, and future funding needs. Action step, use resources like SCORE or the SBA's writing guides to help build your business plan. Understand your financial needs. Clearly identify how much capital you need and for what specific purposes. Break it down into categories. Startup costs, registration, licenses, equipment. Operating expenses, rent, utilities, salaries. Marketing and customer acquisition costs. Action step. Create a detailed budget showing projected income and expenses. Research suitable funding sources. Every funding option is not ideal for every business. Carefully vet potential sources based on your industry type, the stage of your business, startup, growth, etc., specific requirements such as credit history, collateral, or business type. Action step. Create a spreadsheet listing possible funding sources, along with their requirements and deadlines. Preparing a compelling pitch. Your pitch is your chance to persuade funders. Make sure to cover your business value proposition, how much funding you need and what it will be used for, your competitive advantage and market opportunity. Action step. Practice your pitch in front of friends or mentors. Their feedback will be invaluable. Apply for the funds. Submit applications tailored to each funding source. Ensure your documents are complete and polished. Prepare for interviews and provide additional documentation as requested. Action step. Keep a log of applications, follow deadlines, and be proactive in your communications. Section 4. Common pitfalls to avoid. As you navigate your funding journey, be aware of these common pitfalls that many first-time entrepreneurs encounter. Underestimating costs. Many entrepreneurs fail to account for all necessary expenses. Always budget for unforeseen costs as well. Neglecting research. Failing to thoroughly explore funding options can lead to wasted efforts. Make sure to understand every potential source's application process and requirements. Poor presentation. Whether you are applying or pitching, presentation matters. Ensure clarity, professionalism, and that your materials are error-free. Lack of preparation for backer. Questions. Be ready to answer tough questions about your business model, competitors, and growth plans. Ignoring feedback. Always be open to feedback on your plans and pitches. Being adaptable is key to success. Section 5. Real-world examples and success stories. Case studies and successful stories can provide inspiration and tangible examples of effective funding strategies. Let's look at 2 real-world examples. 1. Brewdog. This Scottish craft brewery began with a self-funded model using the founders' savings. As they grew, they launched an equity crowdfunding campaign that raised $7 million by selling shares directly to fans. Not only did they raise capital, but they also created a community of passionate brand ambassadors. Warby Parker. This eyewear company was able to raise $2.5 million from angel investors by presenting their innovative business model that focused on affordable eyeglasses and a social mission. They successfully demoed how they could disrupt the traditional eyewear industry and even offer their eye care programs to low-income individuals. These stories emphasize the importance of creativity and community engagement in securing funding successfully. Conclusion. Thank you for joining me in exploring the different funding options available for your business. Remember that insightful preparation and understanding your financial needs are critical components of successfully securing funds. If you found this episode valuable, please like, subscribe, and click the notification bell so you never miss an update. If you have any questions or want to share your funding journey, drop a comment below. Let's keep the conversation going and support each other. Are you ready to take your business to the next level? You can find more related materials to what we share here on bizbuddy.com.ng. bizbuddy.com.ng is a cutting-edge online resource hub, meticulously crafted to cater to the needs of entrepreneurs and business owners seeking a comprehensive repository of information, tools, and resources to bolster their business acumen. Until next time, stay motivated and strive for success.